there, traders. Welcome to the Wednesday webinar. I'm Todd Gordon, founder of Trading Analysis, and it's been one of those mornings. We got the guest in, Julius. Can't wait to bring him in. We had a blue screen of death just before we were checking him in, but he got it started. And YouTube changed the... Easy, guys. You're on that live. We also have the... YouTube changing the live stream interface here overnight on us. So it's all kinds of fun this morning, but I hope you guys are well. Thanks for bearing with us. We'll have a good show. So let's bring in the team here. Alex, sit up. Good morning. Hi, team. How are we doing?
Good morning.
Alex,
good morning, Todd. Good morning.
Up.
Good afternoon for Alex and Julius. But,
there you go. Good morning.
Oh, it's a frigid morning here, Todd. We got New York weather today down here in Texas.
Oh my gosh, 22 degrees overnight.
Wait.
Oh my gosh.
Wait.
Yeah, we don't get this kind of hard freeze weather very often, and especially in November. It's too early. So,
do you want to see? I mean, since this show is already blown up already, do you want to see what it looks like before Thanksgiving? I can turn the camera on. Let me see if this is going to work. Hold on one sec.
But you got White Christmas already, huh? You got snow on the ground, and
boom!
Oh my
there
gosh.
You go.
Oh,
we
you
got
need
snow
sunglasses.
Let me put the camera back in the best position possible.
That could blind you. That's.
Yeah, we have snow already. So, anyways, guys, what's going on? Just back from the Traders Expo in Vegas. That was fun. Got to keynote, which was good. Let's see. I did have to come home early. We had a couple sick kids in the house. It's going around. I'm getting over it myself. I was in the city for Fast Money and Power Lunch yesterday. Kind of fun. I want to talk about a few of those setups. So I'll be back with the team here in 1 second. Then we'll pull Julius in at the top, founder of Relative Rotation Graphs, a new tool that you've seen us use quite a bit. So we'll be back with the team here in a little bit. All right. See you, boys. So we'll try to get this back on track. There's obviously a lot going on here. Market's making new highs, and let's figure out where we are on the Elliott Wave setup. First of all, in this live screen, how are we doing? Is sound okay? Are we everything looking new? This is everything looking good. This is a whole kind of new setup that YouTube is throwing at us, which is always fun. So let me know. Looks like we're good. Okay. So what's going on? Making new highs. All right. Making new highs based on what we think is the big Wave 4 completion. One of the counts that we've been looking at, I believe are the only kind of Elliott Wave outfit out there looking at this wave count interpretation, which is a Wave 4 completion into October 3rd. It's funky. It's very funky that we have a W, we have an X, and we have a Y wave correction. Okay. The completion sets up a new wave 5 high, which we've looked at. I even threw another one out there at the team yesterday, and we can have a discussion about that. But could the wave 3 have actually started back here? And this is a dreaded triple combination. Okay, so instead of wave 3 being up in October 2018, it's back here in Jan of 18. So wave 3 would be here. So it would be some kind of W, X, Y, X, Z. The most dreaded triple complex feared correction in the land. It would kind of explain how sideways this market has been. But what's interesting is under this interpretation, guys, the wave 3 ended on October 1st, 2018. Wave 4 began. And then wave 4 ended October 2nd, 2019. So perhaps wave 4, wouldn't it be so poetic for wave 4 to be exactly 1 year old? Now, I have to say, guys, if you've been a regular viewer of this show, we gave you this long entry. And they say nothing comes for free. We gave you this long entry. Let me bring in the team. Here, one sec. Let me just flip in. Bennett, Terry, Alex is gone. It's all right. But we have been kind of riding this long position since October. The trade that we've been working on here, and the trade that we've been very kind of, I don't know, what's our word? Vocal about, transparent about, has been this NDX call butterfly. So if we just kind of look at the position that we're in, let me just pull this up here a little bit. Oh, I got to go over to my Roth. Doing this trade in my Roth, no less. We're right at the point where we could get the pin. Right now, I'm up about 7,000 on the trade. Friday's expiration, if we get the 8250 pin, could be a $17,000 or $18,000 trade based on this. The trade was originally put on October, let's see here, when did we put it on, view trades? October 14th is when we put the original trade on, and this is something that we looked at in live, real time with you guys. Okay, we kind of walked you through every step of the way here, back from this kind of point of must hold. And then we put the trade on. We were a little late. We didn't get the exact low in wave 2, but we did position for the breakout on October 14th. And again, we walked you through every step of the way, and we've ridden this all the way up. So now we're trying to get the 8250 pin. And again, what this trade is a call butterfly. What we did was we bought a call here at 81.25, sold 2 at 82.50, and then sold one, or excuse me, I'm doing it backwards here with the flies. Bought 1 here at 81.50, sold 2 at 82.50, bought 1 at 83.25 area. So we're trying to go from this zone all the way up to here to take advantage of the directional kind of aspect of the options, but also once we get up to this point, which we expect to be wave 3, we want to start to chew up time on the clock. And that's where theta kicks in. We've made money in the directional aspect, but now we need to make money on the decaying options. And those are going to be the body of the butterfly. So right now, we have 1,048 in theta. So I'm making 1,000 a day in theta. We have slight negative delta, which means we want to get back below the 8250 calls. And that's that. So we still have members in the trade, right, Terry? Right,
yeah, we did call. We did get a little excited when we got a double, and so we went ahead and told our traders to take a half a position.
Correct.
Correct. Off of the table, and so
I didn't just. That's something I totally forgot because I actually wasn't here. The team did it. We lost power. It's been a volatile kind of winter starting here in the fall. I still have the full position, but Terry and Bennett, and those guys,
nice
they took half.
To carry the whole thing.
They took half,
yeah,
and that's
but
complete.
We did
that's really important to bring up.
There's nothing wrong with putting money in the bank, and so carry
Especially
the other half
market.
of the trade on. Yeah.
And I'm going to pick on one of our members. I won't say his name. I love him. He's been with us a long time, and he said to me, "Do you guys see this on Facebook?" He said we have a Facebook members group, and he said, Todd, in the past, he's like, this is much easier. Perhaps we've traded too much in the past. Why don't we just do more of these trades? Did you see that post on Facebook, Terry?
It was lovely. Yeah, it's perfect.
And I'm like, well, hang on. And guys, you know me, I'm sick. I'm kind of tired and grumpy. I didn't get back from the city till 11 last night. So whatever. But, normally I'm a little bit more positive in the morning. But if you think about it, and I'm gonna reach out to him on Facebook and be like, look, let's just put this in context. And again, I'm kind of banging the table on this because we walked you guys, regular viewers of this weekly show, through this every step of the way. And we gave you the trade throughout. Number one, using the rules and guidelines and principles of Elliott, we called the end of a May to October triangle consolidation, which is designed to frustrate most traders out of the market. Number one.
Well, it frustrated me for sure. It was
frustrating.
But the very frustrating year.
You're a professional, but you know that we are in a triangle, and that's by design. That's how triangles are designed to be. So you just got to self-monitor. I mean, to run a trading business as we do, and say, guys, we're in a triangle. It sucks to pay us, monthly to tell you be calm with your money. Don't risk too much because we are in the context of a triangle. But then what we did is we got super aggressive once we started to see evidence as a team, which we did. And then called us and rallied up and out of this. And basically, we got a 6% move in the market, which on average over the last 100 years, the index has moved 7% over a year. That's the return that you could expect if you're just invested in the market, and that's it. So basically what we did was we called, using Elliott Wave on this show for free, the total expected yearly return of an index over 12 months. We did it in 2 weeks. So I'm looking forward to going back and say, look, let's just put this in context. One, the timing was perfect, and two, almost perfect. We didn't quite get the wave 2 incher right here. But two, calling a 6% move in the index in 2 weeks and leveraging pretty heavily with option was good. I had about 2,200 of risk on the table. I'm up about, I should be up about $8,000 today. And if we can stay calm around 82.50, I mean, you can make 15, 16, 17, so 7 times your money. So that's why I'm spending a little extra time on that, guys. I mean, that's basically how you do it. That's how you do it. So, all right, so that's that. Now, all that being said, this is something we kind of talked about. I was talking about with the Fast Money crew yesterday, how we're seeing a lot of gaps close, and of course, within the context of where we are, I believe we're starting to come up on the end of wave 3 here in the NASDAQ. So as we go off the 2-hour, get down to let's even go to a 30-minute. The wave 3, this is where you expect to see a lot of the gains, right? And a lot of these gaps took a while. Actually, these 2 gaps have not been filled here on the NASDAQ. So this is typical wave 3 price action. But what we've seen here in November, we had a breakaway gap here November 1. November 3rd, we had a gap up. Gap was closed on the 6th. We had a gap up on the 7th. Gap was closed on the 8th. We had a gap down, which was closed, and then another small gap up yesterday, which was closed. So we've seen, I think, 1 unfilled gap in November and 4 have all been filled. So that kind of gives us context that perhaps we're starting to get a little tired here, and we will want to be very careful on additional long positions until we get the wave 4 pullback that the market is requiring, which it could just be this little guy down here, maybe a little wave 4 pullback, blue 4 compared to this blue 2. Okay, so that's what we're looking at in the NASDAQ. I want to save the sector rotation stuff for Julius, our guest on the show. We're very excited for that. S&P is going to be very similar here. I am starting to see some weakness in the bond market. TLT is dropping quite sharply, pushing rates up. And what's interesting is I think this market is handling it quite well. A move up in interest rates. We've seen the 10-year yield move up 50 basis points from October 3rd up to where we are now. The market just moved 6%. So it's pretty impressive, right? Normally when we see that kind of move up in yields, move down in bonds, stock market starts to get a little fearful, and maybe we're seeing that with that kind of gap close phenomenon that we're seeing right now. That being said, the TLT, we are moving down into a pretty good 3-wave support zone. We're starting to see some fib come into play. I could even throw a 4v2 in there, and let's throw a 4v3, start to build a little bit of zone. So in the TLT, if we are up into a resistance in the indexes, as I just mentioned, here's your support zone down in TLT, 36.35 down to 32.75. If you start to see that zone of support hold, watch out. I believe it also is a parallel channel from this downtrend right here. go like that. I don't have any positions in TLT, but if the stock market does start to get a little toppy, I will be looking to pick up some bonds into that low. Gold has a very similar situation. Terry Bennett, Alex, is there anything you guys want to add before we bring Julius in? In fact, take us through something quickly, because again, this morning was a total fire drill. I have a nice. Actually, I'm okay. Yeah, is there anything to add, guys, or do you want to bring in the guest?
I'm very excited to have Julius join us today, because we did stumble across this technology here recently, and Julius has got a lot to offer. He's the founder of Relative Rotation Graphs, and I've been following his work at stockcharts.com. I'll give a plug for them.
Yeah.
So very excited to see it. We've been trying to demonstrate to our viewers the sector rotation that has been occurring, and then how it impacts it. And it's another reason why we were able to call the turn in the wave 4 is because it became very apparent as what sectors had been leading us all throughout the summer took a turn south, and how we identified this. So I'm going to leave most of it to the master here, and look forward to this interview.
Yeah, no, I agree with that. Let's pull him in here. Julius, welcome to the show.
Thank you, Todd. Good to be with you.
Oh, you sound great. You look great. We can't tell you it had a blue screen of death this morning.
Oh man, it wasn't even a blue screen of that. It was Windows just decided to do an update, and I said, yeah, that's fine.
Oh, it was an update.
And usually it's like 3 minutes, and then this one was like one of these massive ones that actually took like 50 minutes or so to do it. So yeah, I actually tweeted a picture of my desk with my nice big screen blue and my laptop like Plan B set up, but just before we started, everything came back to life, so we're good to go.
Oh my goodness, that's fun. Okay, I driving this morning. I was here nice and early to check you in, and I'm driving on my phone. I said, no, I thought you had the crash. Here we go. I'll show you. Here's the tweet right here. Let me pull this in. So here's Julius right here. You can find him at RRG Research on Twitter. Okay. And this is the blue screen, not blue screen, this is the update. This is the update. Look at that.
Windows updating. Yeah.
Windows update. All right. Well, hey, welcome to the show. How did I do on your bio? I was trying to pull the highlights. Dutch Royal Military Academy.
Yeah.
What? Wow.
So the military academy, I spent about 10 years in the Air Force, and then I went to the buy side. IRIS is actually an abbreviation for Institute for Research and Investment Services, which was part of Robeco, which in the US probably is a more well-known name. And then you missed the R in Rabobank.
Oh, yes.
Rabobank, yeah, that's pretty international bank, and I worked on the trading
floor
there in UK. Yeah. And then I switched back to the buy side, and then I started RRG. The company actually in 2014, but RRG was launched on Bloomberg in January 2011, and that was pretty much the start of when it came on Bloomberg. Like 3 weeks later. Refinitiv came to if they could have it. Later on, we onboarded Stock Charts, and then Optima. We're on the website of the Hong Kong Economic Journal, and we're working with State Street now to show their spider ETFs here in Europe on RRG. So we're constantly trying to expand our reach and reach more people through data vendors and software vendors and platforms, etc.
So literally taking the technical analysis world by storm.
We're trying to. I mean, by storm. It's already 8 years since they were launched, and it's still new. And that's what what I had to realize, that even 8 years is nothing in TA. I mean, it's
right.
There are still a lot of people who don't know RRGs.
So, and I also see I have Trevor Neal working for you. That's a name I know well through the industry. Nice team you have there. So tell me about the story is so interesting, and you know, here's a question I have to start. This whole sector rotation, is it kind of the catchphrase of the current era within technicals? Because there's so much more data and information readily available at our fingertips, or is it something that's been in existence just recently? Such clear rotation, indicating, you know, underlying strength in the economy based on whatever sector's leading or lagging or weakness in the economy, or has it always been there and we just haven't been able to mine for the data?
I think that the concept of sector rotation has been there forever. I mean, I'm in the markets for 30 years probably right now. So, I mean, I've always heard about sector rotation. And when I was working on the trading floors on the sell side, I had to basically to sell my research to institutional investors. And these guys were running big equity portfolios. And, you know, the only thing they could do is overweight and underweight certain areas of the market, because they're not retail investors that, you know, I don't trust the market, I go 100% cash. That's just not an option for these people. So I needed to make calls on which sectors or which areas of the market I thought were going to outperform or underperform. And, you know, if that's your job, then you pretty much very, very rapidly come to the use of relative strength analysis, like comparative relative strength. I'm going to compare technology with the S&P 500, and I'm going to compare industrials with the S&P 500, or, you know, all these comparisons, and that was my bread and butter. That's what I did. That's what I wrote my research about it. I said I'm expecting technology to outperform. I'm expecting chemicals to underperform.
Right.
So that was basically my business, and it's been like, yeah, so. I mean, as far as I know, the catchphrase of sector rotation was always there. What struck me is that nobody was ever able to actually show that markets were rotating. You know, they were always showing these linear.
Right. Oh, that was a softball question just to get you started.
Absolutely. The visualization, the necessity is the mother of invention. And as an engineer, I'm a retired chemical engineer. You know, the visualization of the data is what's really key. And like you said, what we had before, linear charts and stuff like that, is just too difficult to explain the concept of what was happening with that, and I'm really intrigued and fascinated how you decided to use this the relative ratios, relative strength ratios, and momentum ratios.
It's amazing. I mean, for me, I'm kind of pinching myself, Julius. We're really onboarding this within our company. I don't know if you heard the beginning of the show. You know, we're new. We haven't really worked together before. I appreciate you coming on. Like you have. I know you're busy. You know, we take a very kind of non-traditional approach with Elliott Wave, which I'm sure you've come across. You know, I just laying it out there. It's near and dear to my heart. I love it. In order to position my own portfolio and analyze the markets. I hate teaching it because it's quite a challenge to get people to understand that the market can unfold like this. But something like this gives us a whole new context and a whole new way to approach the markets. And in fact, we're not looking at traditional, you know, charts that go from the bottom left to the top right and uptrends, or vice versa, you know, from the top left to the bottom right and downtrends. I mean, watching markets literally move in all different directions. It's almost like markets are trading back in time. So, you know, this is amazing. I've been in the markets now for 20 years, and this has been the first thing for me that has really just kind of rocked my world. So thank you for putting us out there. I'm going to show your screen right now. Go ahead and minimize that browser window.
That's a mess.
That's okay. No, that's just a feedback. And now there you go. So you're up. You are up. Let me bring Bennett Yep. So go ahead. Now, what are we looking at here to start? I can see the PowerPoint and the RRGs.
How do you want to proceed here? I mean, why don't we do because okay, let's magnify this one here. So here is a relative rotation graph as it is. And this shows the 11 sectors in the US.
Right. Right.
The tail is the time aspect. So this is a 5-week tail, 1, 2, 3, 4, 5. And if we drag it, we can actually, scroll through time. That's the little thing that you see up here. And you can actually see that rotation taking place over time. Now, this is a weekly version of the RRG. I can change that to daily. And then we have the daily rotation, which is much more granular and faster. And the good thing about the Optima software that you're also using is that we can actually do it intraday. So let's say 60 minutes. Now it needs to load a little bit.
So while that's loading, Joyce, let me ask you, do you have a recommended time frame on RRG for a average holding period for a position or an investment? How do you equate those?
When I did my research based on this, and I wrote my reports for institutional investors, I always told them that whenever my report came in, it wasn't necessary for them to open it in the next hour, not even in the next few days, because my rule of thumb, and I was using weekly data, is that when I changed, I could say outperform, underperform, or neutral. Those were my 3 calls. So if I said switched from, let's say, neutral to outperform, that call should last at least 3 months.
From weekly data, that call is good for 3 months.
Yeah, so weekly data is about 3 months.
Okay.
Switch to daily, you're probably looking at 3 to 4 weeks, and you can just apply that ratio to the time frame, I would say. So there you go. That's your rule of thumb.
Okay, got it.
Chart has loaded, so now we're looking at an hourly RRG for, again, US sectors. Let's stick with this. That's the easiest to do. And you see that in whatever time frame, that rotational pattern, that rotational aspect continues to come back. I've got currency traders that load up an RRG with a bunch of currencies and look at 1 minute or 5 minute RRGs on the top of the screen just to see where the action is and where things start to roll over or curl up. Now, what are we actually looking at? Think that if I just collected a few slides that I've been using. Now, the main reason why are we using this and why is it so powerful is because an RRG is able to show you the rotation and the movement of multiple securities over time in one graph. Because remember that a normal one-on-one relative strength comparison is always, you look at materials versus energy, materials versus financial, technology versus energy, technology versus financial.
Right.
If you look at that, this is 10 sectors. You have 100 charts or 100 possible combinations. Now, if I've looked at energy against energy, I don't have to look at, or technology to technology. So I can lose the number of elements in
Wow,
my
that was
universe.
cool how you just did that. Is that just another is that another slide?
Come on, Tom.
You boys at RRG are slick.
He's a wizard.
We're not done yet, because when I've looked at financials versus technology, I've also seen technology versus financials. Or when I've looked at energy versus utilities, I've also seen utilities versus energy, because they're the reverse. That comparison is the reverse. So watch this, man. Watch this. Woo!
Wow, that's the ultimate game of Tetris.
Anyway,
That's great.
seriously, it means that this is still 45 charts that I would need to look at, browse through, to make up my mind on how all these different sectors are moving against each other. Now, 45 charts is probably something that I could do. The only issue is that I can only look at one chart at a time. And if I've seen, chart number 3, I think, oh, that's a good relation. Oh, that's number 13 is pretty good. 5 looks good, but you lose track. And that's what RRG does. It gives you all these relationships in one image. Now, the basic plot is a basic scatter plot. And on the horizontal axis, we've got the JDK-RS ratio. And on the vertical axis, we have the JDK-RS momentum. Now, what will happen is that securities, let's stick with sectors for easy reference. You have sectors that are in a relative uptrend, and that uptrend is still being pushed higher. You're inside the leading quadrant. And by the way, it's crucial to understand that RRGs are not showing performance or relative performance as such. They are showing trends in relative performance. So the algorithms are searching for trends and not like a performance over a period of time. We're looking for trends. So that's a crucial aspect that you need to understand. Now, in a trend, the first thing that will happen is that you will start to lose momentum. The trend doesn't just go from up to down in a day or in a week. You start to lose momentum first. It starts to roll over. I mean, you're all technicians, so you know the story with the ball that goes up in the air. It's got a lot of speed, and then before it actually reaches a standstill,
reaches the apex. I've used that
exactly.
I've used that on TV multiple times to explain loss of momentum. Right. Even though price continues to go up, it does so at a decreasing rate of change.
Exactly, and that is exactly what that RS momentum does.
Got it.
So then it rotates into the weakening quadrant, and that means that the trend is still up. It's just losing power. Now, if that loss of momentum continues, now we move into the lower left-hand quadrant. That's the lagging quadrant. There you will find sectors that are in a relative downtrend, and that downtrend is still picking up downward momentum. Now, again, just like on the positive side, the first thing that will happen is that you will start to pick up momentum.
So, Julius, let me just go back. So, yellow to red is literally this. It's literally rolling over. We've reached the apex as soon as we cross that 100 level from yellow to red, and we start to go down on a relative basis.
And then the algorithms that are behind the RRG lines suggest that a peak has formed, or a trough has formed when it crosses over this vertical line here. So, yeah, you're right.
Got it. Okay, perfect. Thank you.
And then the momentum is when the curve starts to turn around. So when the trend has peaked or troughed, then the momentum starts to curl up or go down. And when you plot that on the chart, you will actually see that it shows a rotational nature, a rotational characteristic. And when I started playing around with that, and when I had this was like Excel with a lot of VBA code, spaghetti, a sheet that I was the only person that was able to read it.
Wow.
And I thought, hey, this is pretty cool. And, so this is how it all started, basically. And let's see, what other stuff? Oh, right, here, this is cool. Because, everybody asks, what is the interpretation? Now, my initial, and by the way, these are the 30 Dow stocks. And then you can see that they're scattered over. So this is the 30 Dow stocks compared to the Dow Jones Industrial. So the benchmark is always the center of the chart, and everything rotates around that center.
Yep.
And my initial rule of thumb was, inside leading, that's where you hold. That you have a position and you hold that because it's going in the right direction. When it moves to weakening, you look for sells or rebuys. And I'm going to explain the rebuys later on. Inside lagging, that's what you want to avoid because that's in a relative downtrend. You're not going to make any excess money there. And then inside improving, that's where you look for buys or resells. Now, initially, I thought, exactly as you said, when you cross over, that's a buy signal. When you cross from right to left, that's a sell signal. Truth is that, before you have actually picked up enough relative strength, price has probably risen significantly, and so has relative strength. So,
but by the time it goes from improving to leading, it's gone. Would other technical indicators consider that move from blue to green overbought? Is that the wrong way to think about it?
No. I would think that is like a breakout, or if you want a crossover of a moving average, because there's trends that are in play, and they are gradually shifting. So price closes above a moving average. That is something like this. The only thing is, you can have a 5-day or a 50-day, and that's where all the differences are coming in. Okay,
got it. Okay.
So aggressive sell and aggressive buy probably is more like your oscillator type stuff.
Okay. Let me just go back and go from lagging to improving. Would that be like maybe a market? And again, I know I need to think about this like multiple dimensions with going from red to blue. It's not. Is it like the equivalent of kind of finding support along a established range, a range that we know it's in place, support, and then once we break through the range, that would be going from blue to green. Is that too simple?
Yeah, that's a good analogy. It's probably that'll work.
Okay,
that'll work. I've also explained sometimes to people, conservatives, everybody works with moving averages. So conservative is, close breaking above a 100-day moving average, and aggressive is price breaking above a 5-day moving average.
Okay, got it.
So that's where your trend is.
So let me just ask you one more question. The way you would approach this, irrespective of time frame, traditionally, do you like to add positions? Do you recommend traders to gain exposure going from red to blue, or from blue to green, depending on your style? Is there a way we could look at legging into positions, maybe take a partial position going from red to blue and then adding on blue to green? What can you tell me about that?
We have 1 hour, huh? I mean, because what you're asking right now.
Okay, all right.
We certainly can have you come back.
Yeah, we're going to have several dedicated webinars with you. I'm booking you now. This is just to wet the whistle of our viewers.
We're scratching the surface. The question that you're asking me is, in my view, analysis and portfolio construction are two completely different animals.
Tell me about it.
I've actually read in an article not too long ago that analysis and portfolio construction are two completely different animals in the same zoo. And what I mean with that is that you can have a piece of analysis, but an institutional fund manager picks up that piece of analysis and goes with it, and he does something completely different than a retail trader. So how you interpret it and how you use it, especially what is your investment horizon, what is the time frame that you're using, is so crucial to answer that question. So I find it difficult to give a one-size-fits-all answer for that.
Such a tactfully and well-delivered dodge of that question. I commend you, sir. No, I totally understand. And we are in that game. We're one of the few trading and analysis outfits that literally put our money where our mouth is. We're always very careful about recommending to people how and when and what size and what percent to deploy capital and what kind of markets. So I'm very sensitive to that, and I understand that.
By the way, I have to say that I find it super cool that you're actually doing that, because there's a lot of people talking about it, but not a lot of people doing it. So kudos to you guys.
Thank you, sir. Cool. Thank you. So please continue. We have a few more minutes, but again, market's just open, just a few more minutes. This is just a quick 10, 15 minute intro. And then again, I'd really love to book you.
Let me give you, this is the actual rotation as we're seeing it right now.
Okay.
And the way I read this is that we have utilities, real estate, staples, they're super fast moving through weakening into lagging, while industrials, financials, technology, materials, they're all rotating towards the leading quadrant. For me, that is a bullish rotation, because this stuff here is all high beta, is aggressive, and staples, real estate, utilities, these are all low beta, defensive sectors. And this is the type of rotation that you see in a strong general market. And the general market here is the S&P 500. So that is my take right now. I think that the current sector rotation, as we see it here, is supporting a rise in the market. And it's basically backing up the break in the S&P as we see it. One more thing, because I know that we're running out of time, but I promised that I was going to make your head spin, and I'm going to do that. There's one of the very cool things that we
literally
can do,
and figuratively, get it, and spinning in a clockwise manner.
No. What we're going to do here is right now on this chart, it's just all these markers are the same size. What we're going to do here is actually make all these markers bubbles, and the bubbles are now the weight of that sector in the S&P 500.
Really?
Oh, cool.
Oh, that's awesome.
What you can now actually see is that, because everybody's always talking about breadth, like how much participation is there in the market of sectors or stocks moving. Well, here you have it. You've got information technology, which is the biggest, and I can't move my mouse down, but the lowest line on that hover box, I'm not sure if it's readable on the screen, but it shows the sector weight inside the S&P 500, that's 22.4%. So financials is 12.7, industrials is almost 10,
9.4.
and then we got materials at 2.7. So
Julius, how often is that updated? Sorry to interrupt. How often is that sector weighting updated?
Daily. It depends on your feed. I mean, I'm pulling the data out of the Bloomberg feed. Bloomberg obviously is a high-end feed that has all these data.
Okay.
There it comes on a daily basis. But this is the stuff that we can do. If you are a private investor, you could actually size these, because these bubbles, that's a script. That is something that people can actually code up themselves. And what you can actually do, which is super cool, and I've got people who do that, connect that script to your portfolio, and you just have to have a CSV file with your positions and the weights, and then Optima can actually pull those weights in and size the bubble. So you can bring up all the holdings in your portfolio and size them according to the weight in your portfolio. And I always joke to people, when everything is in the top right-hand corner, you can just go out and play golf and enjoy yourself. When the stuff starts to move, especially when it's the big bubbles, you go back into your office and figure out what you need to do.
That's awesome. Quick question. That is really impressive. How much? What's the weighting? What's the comparison of the relative position of the date compared to the heading or the direction traveled based on the tails in previous dates? And that's for Grant's question, if that makes sense. Does that make sense?
Can you repeat it again? Because I heard a few questions.
Okay, so, and Terry, interrupt me if I'm not asking this the right way. So each bubble, right? Each bubble represents a date and time. How much weighting in your mind in the decision process is the relative location of that bubble in which of the four quadrants compared to where it's been over the last 4 or 5 or 6 or whatever your tail length is? It's heading.
Okay.
It's heading and angle. So basically describe the difference.
Yeah, okay. I have that. What we're looking at is what we're doing is we're using compasses, and I got to do this really, really quickly, guys, because I know we're running out of time. Angles is actually measured from the center of the chart to where it is right now. So the angle tells you very granular where the security is on the plot. So it can be any quadrant, can be anywhere inside a quadrant. This is the angle rate of change. But I think that what this question refers to is actually distance. We'll do this some other time. This one is what they mean. And this is heading. So we had angles measured from the center of the chart. Heading is measured from t minus 1 to t. So here the heading is something like, I don't know, 50, 60 degrees probably, something like that. Just a little bit over 40. Here's 45, 50, 60 degrees. What we found out is that a heading anywhere between 0 and 90 is usually a strong sign.
Okay.
And this can happen anywhere. This can even happen inside lagging. So you can have a positive heading while inside the lagging quadrant. And that's a very early sign. That's a very early call. And that's what makes it so unique, because this is something that you can just simply not plot on a regular linear chart like an indicator. This is something that you have to view. You can actually have a computer scan through it, but it's very handy when you can visualize it in terms of, a compass with a heading.
Very interesting. Okay. There's so much to this, Julius. I can't tell you how much I appreciate you coming in, and I know it was a very quick interview and with a Windows update, but we pulled it together. Really good information. Congratulations on a great project, whatever you want to call it. We're big fans. Just in the last month, we're using it quite heavily. So it's Julius Ducamp. Help me out with a correct pronunciation. Ducampinar?
Ducampinar, yeah, that's it.
Ducampinar, yeah. Founder of Relative Rotation Graphs, and your Twitter is @RRG Research. Yep. Find him, guys. We are working quite a bit with this platform. Would you please come back and we'll do a proper webinar? Do a good hour, do a nice presentation. Could we book you again?
Be my pleasure, man.
That's awesome. That's awesome. I know he's traveling. He's busy. He's the CEO. He's a mover. So I appreciate it again. Thank you so much, and we'll have you back. Give thumbs up. Check him out. Hit him up on Twitter and check out the website. I will show the site as soon as we sign off here. Julius, thanks so much, and have a great rest of the day.
Thanks, Todd. Thanks, guys. See you soon.
Okay, sounds good. Okay, guys, so that was Julius from RRG. I thought that was really, really impressive. Fantastic, right? Absolutely love that. It's a key component of what we're doing here. Let me just get that screen off. Here is the website, relativerotationgraphs.com. Check it out. We do have a referral link on our website. At some point, that's going up. But for now, just go right over to Julius's site. What'd you think, guys?
Loved it. I'd love to have him back.
Yep.
Definitely a lot more than we can cram into a few minutes there. But I think he touched on most of the big points and even shared with us a couple of new things. So I got more work to do. I can go figure out some of those little tricks he's got.
I mean, there's a lot in this. There's a lot in the software program. And what's funny was some emails going back and forth with Alex and Terry and Julius about cryptos. So doing relative rotation within the cryptos. So, Alex, sorry we didn't get you today. This morning was a complete fire drill, but cryptos seem to be a little quiet for now. Still holding. Are they still holding support, Alex?
You're muted, Alex. You're muted. Unmute yourself.
All right, that's fine. Forget it. All right, so let's leave it there. Let's do a check here on the markets. Terry, Alex, Bennett, guys, good job. We'll see you in the member webinar in about 20 minutes, and and we'll leave it there. All right, guys. So let's do a quick. Let's just do a quick update here on the markets. We'll show you what's going on. Julius will pull that down. Markets are now open. What is happening? Uh-oh. We're on, actually I can pull the boys back in here. There we go, you guys are back. We're on pin watch, 8250. So we're starting to see this kind of hesitation, which we expected. NASDAQ down 0.16, S&P down 0.2. Let's check the position to see what we're doing. Oh, that's such a thing
Right
of
at the
beauty.
body.
Right in the body. Traders, if you could just do me a favor, if you see the NASDAQ get below 8250, will you buy it up? And if it gets above 8250, would you sell it down?
Let's just hold it there.
If you do, I'm having a party, and I'll invite you all out to Saratoga next summer, and I'm buying drinks for everyone. So let's just see where we're at here. NDX.
My favorite sayings from the A team is, I love it when a plan comes together.
Hannibal. Hannibal would
you
say
know,
that.
that was George Papard always said that.
Hannibal,
I think,
right? Not B.A. Baracus, Hannibal?
Yeah.
All right. So, guys, and then Murdoch, right? They used to have to break him out of the mental hospital.
Murdoch was a crazy one, right?
Yeah, they had to break him out of the mental hospital
every.
every week for the show. So they could. All right, guys. So we're going to leave it there. Thanks. Throw a thumbs up. And again, sorry for the fire drill this morning. Just anything that could go wrong in live TV does. But hey, that's life. So anyways, pulled it off. Good show. Thanks very much. Check us out at tradinganalysis.com. And we'll take care of you on the stock options, Forex, crypto side. Markets are moving higher. As Julius said, rotation is strong right now. We like it. We have to couple that with the overbought status on the intraday charts of the index for now. All we're expecting is a way for a pullback. I don't think it's time to add risk now. I think it's time to take some risk off. Look for a couple of percent pullback, and that's the way we're going to be playing it at Trading Analysis. So we'll leave it there. Guys, we'll see you in the member webinar in a little bit. Thumbs up if you don't mind on the YouTube window to let us know that people appreciate the work, and we'll see you next week, if not sooner, in the members area at Trading Analysis. Alex, Terry Bennett, thanks, guys. Great job, and see you in a little bit.
All right.
Take care.
Bye, guys.